quick sneak peek. How are we getting on in terms of the very nascent arena that is the Ethereum CME charts? Gaps all over the place. This thing is yet to sort itself out. Clearly we've got a really low liquidity in here. This is reminiscent of anything of like the backed whenever that came in here. I'm not going to say that this has got anything positive for us in terms of the charts for it, and I'm not going to say it's got anything negative. It is, if on balance there's any opinion to be drawn from this, is that it's been underwhelming, and anything underwhelming during a bull market is not what you want to see. In fact, what you want to see is to be overwhelmed, just in the same way that our friend Joe is playing with his nice red car underneath his president's tree on, of course, President's Day today. Happy President's Day, Mr. Joe. Jumping on over towards, I'm just kidding. I've got no political opinion with regards to the American president, none at all. That's just a bit of joke, just a bit of fun, bit of satire. Okay, here we are on the Ethereum chart, and what are we seeing here if not a glorious retrace back down towards our lows of the wedge that we could have obviously have said with tongue-in-cheek was predictive for us. Now, as well, to draw in a couple of extra ideas for you, what did I say with regards to the Tilray chart, looking at the crosses of the moving averages? Well, the yellow can cross over the green. It's going to give you a degree of a false signal. Not so much in terms of just simply being able to trade this thing towards the downside, seeing a 7% move down, of course, but this is in terms of rebuys fairly nicely operating for us, with this area having been a great rebuy zone for anybody trading at the time. If we were to see the yellow moving average, of course, then take out the green one. This is where we're seeing these lows coming in at. No big deal. That's essentially the 8-period exponential moving average, is then saying that on average we're in the last 8 candles on the 4-hour time frame, we're doing worse than we were on the previous 18 candles. Well, that is what you would expect to see in a trending market. Now, what we could look to, of course, is in terms of the really short-term moving averages, actually taking out the longer-term moving averages, and that would be the 8-period, taking out something like the 56-period. Now, this is still a relatively short period moving average here with this purple line, but if that were to happen, then the picture would have changed, in which case you would be looking at the measured move from this towards the downside. We're still on here for a measured move towards the top side. If we were to go towards the downside, then you're looking down to 1300. That could precipitate moves further on down the way, but right now we're trying to see if at this consolidation point in here, where we've put in these little bits of highs at the 2.24, we can actually muster up a degree of strength. So if there is some sort of divergences, etc., on the way up here, maybe we're seeing a chance for the oscillators to reset. Has that happened, and have people just provided liquidity towards the bigger accounts in this section here, which was, of course, a classic stop hunt? Let's see with regards to these moving averages overall. No hidden bullish divergence, definite divergence there in terms of the bearish case scenario. So yes, the trend is telling us that it's towards the top side. Yes, that's what we're going to keep going for, and yes, we are looking up towards the 3.414 $2,300 or so target for our next movement up the way. Let's call it 2,350. Why not? But we're also going to have to be real about things and acknowledge the fact that if we did see a break down the way, we'd also see a break of the consolidation FR on the lower term time frames of the RSI. As you can see, though, we do have this upward slope, this downward slope being the divergence towards the the bearish divergence, this upward slope being that demand line, showing us that we keep finding our feet and rising back up above the neutral line, which is coming in more or less equidistant, more or less in terms of this one. The peaks towards the top side kind of offsetting that overall movement. If you were to ignore the peaks though and take it in from the sort of the average zones of this, then of course, which you shouldn't do, then of course that lines up in the middle, looking at that neutral line in the RSI with any movement above or below here. With the movements down the way, if we do see them, then of course we don't want to be taking out the 236. Where did we see the low coming in at as well? Well, the low today, 1650. What do we have here? The 236 in there at 1652. Absolutely fantastic, given that rebuy opportunity that we already spoke about. But let's of course wait for confirmation if we're looking towards that 2300 move for movements past the 1939 area. Let's say we need to get up into the proper, we need to get into the proper Second World War dates, push past the First World War dates. We need to get past 1916 and all the rest of it, and up to the 1945s, etc., before we can really take that confirmation and move on the way up. Okay, lovely jubbly. DMI over here, the ADX, is of course down here in chop territory, as we've seen a negative cross on the 4-hour time frame, so you kind of expect to see that in with regards to what we've seen with the divergences, etc., and this kind of consolidation effect that we're seeing within the wedge at a point of profit taking at a significant Fibonacci extension zone, with a look towards perhaps resetting the oscillators before jumping towards the top side. In here on the DMI, we're seeing on the daily time frame that the positive scenario actually remains in place. Let's hope to see the DM negative not cross the DM positive, and by virtue of the fact of the DM positive staying above the 20 line over here, then there's a pretty good chance that that could happen. What does that mean for us in terms of prices? Well, we want to see things, of course, slowly, gradually, nicely, smoothly, evenly, and consistently move towards the top side. Of course we do, but we don't want to see any shock moves down below that 1650 target of the 236. Doing that, of course, does precipitate the move down the way, and 1300 is your target. Movements up past 1950 give you a nice chance of us getting in the resumption of the overall upward trend, which running up to this point, incidentally, was of course not bearishly divergent right up to the profit taking zone, and in fact, comparing it to the previous area in terms of the broad term picture, just there at the 26th of July 2020, we've actually done fairly nicely as well on the DMI. Now the stochastics is going to reveal to us that of course it is as well slightly divergent, etc., etc., but we're up here in the bullish control zone, getting these crosses again and again and again. Could we move up the way? Yes, we could. If we do move up, then there is the danger, I suppose, the sort of the unprecedented extreme highs. I would probably say that there will be a good opportunity for a decent retrace at some point on here, which actually registers on one of the bigger time frames. As we jump up towards the 3-day time frame and take all of the drawings off the chart, you can see that we certainly haven't had one of those red candles as yet, and there will be one at some point, and I think we've identified the key things to be looking out for in the meantime, if that's what you're going to do for if that's what you're looking out for yourself. As you can see here with the no sure thing, it takes a lot of dragging to bring this back onto the screen, and it has come up to as high as it's ever been, or sorry, let me rephrase that, higher than it's ever been before. Whereas when you jump down towards the lower time frames, you can see that we're really kind of finding it coming back down towards that neutral area. That's of course expressing that idea of consolidation that we're having at the minute in what is obviously a very much big rise in wedge, with extreme danger for a drawdown in prices, because that 1300 area represents, in terms of just an easy profit taking target, the breakdown past these zones of a sort of 20% drop off in price. But we could even see worse than that. The two targets thereafter are $1,000 or so as well, and then if you were to go extreme beyond the 900 area, then you're looking down to 750, which of course is a massive drop off in the price. So let's hope that that doesn't happen. Overall, things are looking pretty good, bringing the drawings back on the way, and reminding folk that this is the measured move that we were talking about before, and this takes you down towards that 1350 area. Now if we do find the footing at 1350, then what that means is that we've come down towards the 50% area and not managed to take out the golden pocket. It'd probably be wise to wait and see if we get any confirmation around about 1250 before then getting back into trades, which we recapture that zone and resume the overall upward trend, or else you're looking down towards that $1,000 zone. Of course as well, 1250 down to $1,000, nice $250 move, bring you down to 1,000. It's not full 25%, but it feels like it when you use those sorts of numbers, and that's what you'd be looking at on this one. Of course the overall headline is that we're bullish on this until such times as we aren't. We've identified what would mean that we aren't. We know the area that you would want to be looking at to get in at if you want to wait for confirmation on this thing. We're talking about 1950. Thereafter, I think it's probably reasonable to think that we could get a retest of this thing, which we've seen in the same sort of a way as we saw on the chain link chart, which I'm moving on to just now.